Hey guys, Dave Keller here with Market Misbehavior. Today I want to share with you a chart with an almost perfect bearish setup. So I'm often asked about what makes a chart look bearish, particularly a chart that has been so strong. What are the things you would look for that would suggest that the bullish phase is over and a new bearish phase is now beginning? And I want to share with you an example. Ulta Beauty, ULTA, in the consumer discretionary sector, certainly showing, I think, one of the more classic bear setups that I've seen recently. We'll talk about some of the different indicators that I'm using, how they all have rotated from more of a bullish phase to a bearish phase. Before we get to the chart, if you like this sort of thinking about technical analysis, market history, investor psychology, behavioral finance, why don't you subscribe to my channel? Also, give the video a like if you appreciate it. We'd very much appreciate that back. Put a comment below, thumbs up or thumbs down for Ulta and why. Now, looking at the chart of Ulta Beauty, ULTA, this is a consumer discretionary stock, about a 24 billion market cap. The chart of Ulta up through sort of mid-late April, incredibly strong. You can see that the stock sort of rallied out of the end of last year, made a new 52-week high in February, another one at the end of March, and then another one at the end of April. So first couple months of the year, every year making a new high for the stock. All is well. All of that changed in the month of May. When I think about the seasonal tendencies for the major averages in May, May is actually one of the weaker years in terms of the batting average, how often that May is a strong month, and its average return. May is pretty much the worst out of the 12 months of the year. So charts like Ulta that have been very strong in April, all of a sudden turning on a dime and having a very weak May. That's the sort of chart that really sort of drives home the seasonal tendencies. But I want to look at this chart in particular, one piece of evidence at a time, to really document how it has rotated, in my opinion, from a very clear bullish phase to a very clear, most likely bearish phase. Let's start with price itself, right? So Charles Dow taught us that an uptrend is a pattern of higher highs and higher lows. Look at how consistently the stock was making new highs pretty much every month, off of the October low of last year, November, December, January, all the way through the end of April, making a new high every month. Look at how that changed. In May, we have not made a new high. We've actually made arguably a lower high as we've rotated lower. The low prices have gone higher, right? So in October, through December, through January, through March, through April, we keep making higher lows. All of a sudden that changes. The most significant breakdown is this one right here, breaking below that blue dashed line. That was the low from mid-March. You can see we made a new 52-week high, traded right back to that low around call it right around $500. Bounced off a couple times over the last couple weeks, and then really starting last Friday into today on Monday the 22nd, really plunging right through that support level. So in a bearish phase, stocks tend to not be able to hold support because buyers aren't really coming in where you might expect. So you had that initial bounce off of support, but then we broke through and now following through today, pressing the downside and going lower. Look at the bearish momentum divergence with higher highs in price with this red solid line, and then the lower peaks in momentum. This is a bearish momentum divergence. I'll put a link in the description for some other videos where I've talked about this particular pattern. But this is where there's a disagreement between price and momentum. Price is doing one thing, momentum is doing something different. And the bearish version of that is when price is going higher. So higher highs in price, but the momentum is sloping downwards. Ideally, the initial rally has an overbought condition, meaning the stock is overbought, the price has gone too high too quickly. We pull back, but we make another high. On that subsequent new high at the end of March, we can see the RSI is below 70. It's no longer overbought. That creates that bearish momentum divergence, higher highs in price, lower peaks in momentum. Look at the moving averages. We were above an ascending 50-day and an ascending 200-day moving average. We pulled back to the 50-day moving average in March a couple times, again in early April, and then look in early May, we broke below that 50-day moving average. Now we're below a descending 50-day moving average. The 200-day moving average not yet broken, and it's worth noting that over a multi-year time frame, Ulta Beauty a number of times has gone down to its 200-day moving average, a number of times going below it for a couple days, but often coming right back and bouncing back above it. Note how the 200-day moving average stayed ascending through this entire period, basically, right? So it was either flat or positive that whole time. Breaking below the 200-day moving average would be the next negative bullet point. The moving average sloping downwards would be a real negative trend. So for now, we've broken down through the 50-day moving average. A lot of times in a bullish phase, we'll pull back to an ascending 50-day or 10-week moving average and then rotate higher. That happened in March and April. That's now not happening in May. So we've broken down through price support and moving average support. I'm not drawing any trend lines on here, but any trend line you would draw off of the recent lows, we've basically broken here, particularly on this time frame. Finally, we have the relative strength. Look at how the relative strength overall was trending positive for most of this period, which means even during this choppy sideways period in 2022, you have to remember that most stocks are actually in a pretty severe downdraft at that point, besides things like energy and a relatively small number of stocks and sectors. So staying flat in 2023 was actually a pretty bullish pattern on a relative basis. That's why the relative strength is overall ascending. Then, when the market recovered off the October lows, Ulta Beauty was leading the way higher as well. We can tell that because the relative strength keeps going higher. Look at how in the last 6 weeks the relative strength line has rotated lower. So this shows you that after outperforming the S&P 500 for a year and a half, we're really sideways in line with the S&P in March and April. Now in the month of May, we're underperforming the S&P. So we have the price divergence. Sort of the early warning system would be a bearish momentum divergence, which is the price going higher, the momentum going lower. We're still making higher highs and higher lows, but sort of that early warning system, that red flag that the bullish trend may be nearing an exhaustion point. That exhaustion point most likely confirmed by a series of indicators we've talked about. The price not just bouncing off of the 50-day moving average, but breaking down through the 50-day, which is now sloping lower. Price, instead of making higher lows, is now making a lower low, breaking below that March low around $500. I didn't even mention the big round number, but we broke through a big round number of support, $500. That's not a small feat as well. Finally, the relative strength line has rotated lower. The RSI, the relative strength index, has gone below 40, which is, again, in a bullish phase. The RSI tends to find support around 40. We've now broken down there. So all those things together paint a mosaic of a chart that has transitioned from a bullish phase to a bearish phase. What's fascinating about the chart of Ulta is how quickly that character has changed, what we call a change of character on the chart. End of April, we're talking about a stock making new 52-week highs. We're talking about a stock outperforming, strong momentum characteristics. This is a leading stock in a leading sector. In just a couple weeks, it's rotated and gone lower. Some would say that that's a challenge. How do you handle the evidence changing so quickly? I would argue that's one of the great benefits of technical analysis. It doesn't matter what's happening with this company. It doesn't matter what's happening in the macro environment. This is a set of details, a set of circumstances on this chart that have rotated very quickly from a bullish phase to a bearish phase. The chart doesn't care what else is going on. It's giving you clear signals of a rotation from a bullish phase to a bearish phase. That is one of the great benefits of technical analysis. When the evidence changes, the chart tells you that conditions are different. What do you think about this chart of Ulta? Next 5% move higher or lower, and why? Let me know in the comments below. Don't forget to subscribe to my channel. It'd be great to have you along this ride as we continue to reinforce the benefits of technical analysis, behavioral finance, and investor psychology. I'm Dave Keller with Market Misbehavior. I'll see you again soon.